Hi guys, welcome back to another video. Today we are going to be having a very short video and we're going to be talking about identifying absorption in the market. All right, how to identify absorption in the market. All right, so I'm going to give you just few examples because we don't want to make this video long. Now, looking at what we have here, all right, this is a very good example, and this actually happened yesterday, so that's why I'm making this video. So the very first thing that you need is for a liquidity to be taken out. All right. Then after liquidity to be taken out, when liquidity is being taken out, new set of trades comes in, probably buy or sell. So in this case, all right, a liquidity was taken out here. So if a liquidity was taken out here, we'll be expecting buyers to come in here. All right, we are expecting buyers to come in below the liquidity. All right, just to take out the seller's exchange price, and the price should go up. The price actually goes up, but the buyers did not come in on time. The sellers keep selling. All right, so since the seller keeps selling below the liquidity, all right, that is what we are going to be calling absorption. All right, because the sellers, they keep selling and selling and selling, and they were not ordinary sellers, they were aggressive sellers. All right, so how do we identify all these? That's what we're going to talk about. All right, so after liquidity is being taken out, you check the minimum delta and the maximum delta. So you don't need to check the volume. All right, just leave out the volume because we are checking for aggressiveness. All right, so you don't need to check the volume. So what you are going to check for is the minimum delta and the maximum delta. So in this case, the minimum delta is for the sell, or probably sellers, and the maximum delta is for the buyers. All right, so you can check the difference in the numbers, not the negativity and the positivity, just the numbers. All right, so now the sellers were coming in hard, and if you check the minimum delta, you're going to notice that we have 110 here, which is bigger than 56. All right, we have 110 here again, 166 here, which is actually bigger than this. All right, we have 261, which is bigger than this. All right, so we keep having it like that, which were bigger. All right, so we have a small one here, 15 to 31, but it continues 79 to 25, 91 to 1. All right, until we have a very capable buyer here, aggressive buyer. So it means that when these sellers were coming in, they were buyers. All right, they were absorbing the trades, but it's not on the book. All right, so it is not on the book, it is not here, you can't see them. All right, that is why we don't see the buyers down here, but they were buyers, big buyers here, but it is not on the book. That's why we can't see them. So the ones we can see is the sellers that were coming in. So until here, that is when they now decided to show the face of the intention of what they are doing. So if you look at it here, you will see that we have minus 76, 132. Now we now have a big buyer. So at this candle is when they show the intention, and at this candle is when we are going to know that, okay, this is a very cool one. This is now an absorption, and this is where we are safe, for entry. And if you actually enter there, you will notice that the price actually moved up. All right, the price moved up. So this is the criteria you check. All right, you check for liquidity first. All right, after checking for liquidity, then you check for sellers coming in hard. All right, instead of the buyers, the sellers were coming hard, which is a good sign. All right, then you wait. All right, you don't want to sell if they are selling, so you wait. Then you check for a very big buyer coming in. Then you can see the big buyer here, and the price just moved up there. All right. So normally the condition is when these sellers were coming in, when the price is being taken out by liquidity, we are supposed to see buyers directly, all right, in the book. But since we are not seeing it, all right, we'll wait until a very big buyer shows up. This is another example, all right. So looking at this, all right, liquidity was taken out, all right. Then we could see that sellers were still coming out. all right, after the liquidity was taken out, you can see this minimum delta, that is 507 to 45. Then we have a lot of sellers here, minus 659 to 1, then minus 487 to 231. So we're having it like that. A lot of sellers were coming in at the lows, all right? So this shows that there is absorption going on. And another thing I didn't mention earlier is you're going to notice that it will be in a range, all right? It's not going to be making lower lows, like going on, all right? It will just be in a range, probably like 10 pips range, all right, or 5 pips range. So it will just be in a range, and even if it makes the lower low, it's not going to be something significant, all right? So that is how you know that you were holding it, but sellers keep selling hard, but the price isn't going anywhere. So until you now see a significant buyer coming in, that is when you enter that kind of trade, all right? There are buyers down here, but you can't see them. So until you see a significant buyer, just like this, all right? This is a significant buyer, all right? Even the sellers also agreed, all right? They also agree. You can see this positive one here. So we have 1,279 aggressive buyers, all right? The delta of the aggressive buyers, 1,279. This shows that now, yes, a real buyer, is in, all right? It shows that a real buyer is in. So, and from there, you can see that the price keeps going all the way to the top, all right? So this is another good example. Let me show you another way, because sometimes you might not see it like this. You might see it in another form. So this is another example here. And this actually happen most times during the news, all right? And you will notice that liquidity was taken out here with a very big candle here. So we have buyers coming in, and on that very big candle, we have 1,959 and to minus 34. So we have bigger buyers on this candle. So already a lot of traders will think, oh, there are buyers in, let me come in, let me just enter the market. So, and whenever, as I said earlier, whenever a liquidity is being taken out, you should expect the other buyers or other sellers coming in. So in this case, we are having buyers coming in above liquidity, all right? So instead of sellers to be coming in, so we are seeing buyers. So the next thing for us to check is for sellers, aggressive sellers, to actually follow it. That is what we should check from our minimum delta to our maximum delta. So in the earlier example that I gave, so I said you're going to be seeing candles, but probably accumulation of candles. So, but sometimes you're not going to see accumulation of candle if it is news, all right? You just see one big candle. So when you see that one big candle, all right, the next thing is you are waiting for a very big seller to actually come in. If you look at this, you notice that this is a very big seller. So we have 757 to 65. All right. Even if the volume is very close, but the aggressiveness of the seller is bigger than the buyer here. So that means that we can enter the trade here, and as you can see, the price sold. So this here is an absorption, all right? This is an absorption. So with these three examples, I hope you guys have gotten an idea of what an absorption is, and you will be able to trade with it. So guys, I'm going to see you in the next video. Bye-bye.